Mic test. Hello. It is 12 p.m. UTC now. Oh, hold on. Let me adjust my mic a bit. I think I'm rather soft. Give me a second. Okay. Hopefully this is much better. Yeah. So, okay. I forgot to change my title. Give me a second. Okay, wait. How do I do this? Oh my goodness. Okay, wait. This is definitely not league anymore. My bad. It's been a while. It's been a very busy week for me. So unfortunately, I did forget how to stream. Oh no. Okay. I think this is fine. This is fine. I'm just gonna leave it at this. Maybe. I think this is a better title. Yeah. Give me a second. Let me fix this as well. Right. Is it possible to change this midstream though? I know for Twitch it's possible. Is it possible for this? Oh dear. My bad. Oh no, okay, I don't think it's possible with YouTube. Okay, wait. Alright, okay. I think it's possible. Sorry about that. Okay, I'm gonna cut this out during the editing, I think. Okay, hopefully. Let me change this as well. Okay, I think this is fine. Hopefully that changed. Right, okay. So let me see if my student's online now. He's joining us after a while. Yay. He's not yet online, so I think I can set up more things in the background. Just bear with me for a while, yeah? Sorry about that. This one. And what's the other? Right. Hopefully. Okay. What about the other one? Yeah, sorry, please bear with me. Okay. Wait, where did my mouse go? Eh? Okay. Alright, I think that is good. This is alive, I believe. This is active. Cool. Okay, I think that's good. We are done for now. We're ready. Let me see if he's online. Yes. Alright, let me hello. Hello? Uh-oh. Oh, hello. You're live now. Can you hear me? Okay, wait. Let me. Where did? Oh, okay. Hello. Can you speak?
Hello.
Okay.
Hello.
Yeah, your volume is fine too. Alright, let me
Okay.
stream the question to you then.
Alright. What question are we at?
Like 7, I
Alright.
believe. I believe it's question 7. Wait, where did my?
Jeez. Has the stream started? Am I?
Yeah. You're on. You're live.
Okay.
Okay. Can you actually see the screen?
Yeah, I can.
Okay,
No
today is rather
worries.
short, so
Okay.
right, are you ready?
Yeah.
Okay, so what can you deduce from this question?
Okay. Chihao runs a retail business with a financial year ending on 31st July. The following information relates, well, to the year ended 31st July 2020. Uh, Chihao took cash for $400 every month for his own use. He decided to apportion the telephone expenses $700 as 25% for personal use and 75% for business use. Zhao took inventory for his own use during the year. The selling price of the inventory was $150. The business applies a 25% markup on cost to its goods.
Okay. So all right, let's look at the first question. Right. So what do you think drawings mean in your own
Well,
words?
to simply put, is to remove money from an account.
In accounting terms or in literal terms?
In a literal account.
Okay. All right. Uh okay, then that is your real world definition, right?
Yeah.
Okay. What about the in terms of accounting?
In terms of accounting, uh is to debit drawings and into credit cash at bank.
Okay, but what does it mean to debit drawings and credit cash at bank?
What does it?
Hmm.
I'm not sure what you're trying to ask for here.
Okay, so what I mean, how do I phrase this? What event would
What
trigger this then?
what event would trigger this?
Mm-hmm.
Well, he needed money for his personal use.
For personal use, right? So
Yeah.
then you link it back to drawing. So what does that mean?
What does that mean? Link it back to drawings. Uh, it means that I I still don't quite get where you're going with this. Uh, uh, I guess it means that I don't know, he needs money.
Okay, so in accounting, right? Basically, if the owner
Yeah.
takes money from the company, it's considered
Okay.
drawings, right? And that's for
Right.
his own use, not for company use. So drawings essentially
Right.
just means you're using company assets, be it cash, in this case inventory, right? Telephone
Right.
expenses would just be the outflow of cash, right? So you're using all these benefits of the company for your own personal use. So you record it as drawings because
Right.
it is not supposed to be borne or taken up by the company, right?
Right.
So yeah, that's why you have to separate it from whatever other transactions that it came from.
Okay.
Yeah. So when I ask in accounting terms, right, I don't mean you just stating the double entry because anyone can state double entry if you memorize
Right.
it, right? The
Right.
important stuff is to understand why you make the double entry and what does it mean to make a double entry, right?
Okay.
Yeah. So
I kind of gaslighted myself because like it was kind of implied that it was for personal use, and then
right.
it's like I thought there was like a deeper meaning to it. It's like,
I
I
mean,
started to overthink it a lot.
I did stop you after you said that one word, that phrase. So I don't know,
Right.
maybe I wasn't too clear on that. That's kind of my bad.
Right.
But yeah, so
No. No.
essentially it just means that, right? You can look at your answer, see if they said something different. Then you can probably follow that. But by my understanding, and it's the thing that worked out for me, is just when owners use it for their personal use, not for company use, right?
Okay. Textbook answer is drawings refer to the owner's withdrawal of cash, inventory, or other assets from the business.
Okay.
So
from
personal
the
use or
business.
not, yeah, it's just from the
Well, I
business.
mean, from the business just means not
It's
business
personal,
use.
yeah, it's not
Yeah,
business
so
use, yeah.
I guess, yeah, sure. Um, all right, so okay, they went a bit more detailed because I think they were relating it to the question, which I
Right.
think is a good step, right? So
Mm,
things like cash, right? Telephone expense will just be outflow of cash, so it's the same thing.
mm,
Inventory will be other assets, right? It's like current assets. So these are all assets used by the owner and not for
right.
business, right? So yeah. Okay.
Okay.
Prepare drawings account for the end for the year ended, yada yada. Not sure if they wanted a T account or a general journal, but I think it's a T account by um from what I can guess at least. Right.
Okay. What was the T account transaction account?
It's not a transaction, it's an account itself. So it just you just write the name of the account on top, which is drawings in this case, right? You just draw a
Uh-huh.
T. That's just T account.
Okay.
Yeah, so it's not it's not that deep, I think.
Okay.
Right, let me erase this line. So in the exam, just use a ruler and draw
Mm,
uh just draw a T, right?
mm.
You can check the answer, see if they want a T account or not, but if they're asking for account itself, it's either computation only, so you just calculate, or you have to draw the account itself. So I'm not sure what they want here.
This does not look like a T account.
Is it just a bunch of calculations?
Uh, Here I'll send it to you. I think it's just a general journal, but
General
maybe
ledger,
this
is
is
it?
yeah, maybe this is their version of the T account.
No, no, no. T accounts are different. General ledgers are general ledgers.
No, but, like the way they draw it, it's not really a T, say.
Oh,
It
okay.
still says drawings on top, but it's not.
Uh,
I think it's just a drawing.
drawings. This is more like book though. Hmm. Eh.
I am
Uh,
just as baffled.
you know what?
How about you
It's
just
the
pull it
same thing.
up and
It's essentially
yeah,
the same thing. It's fine. All
it's
right.
actually a T account.
Yeah. So okay, T
Okay,
accounts are the old way of doing things essentially.
okay.
Um. So how it works is basically just you start off
Mm,
with uh balance brought down, but here they didn't say anything, so we could just assume there wasn't any, right?
mm,
So at the start, it'll just be cash for own use every month. So by right, how it works is just you debit. So what you write is essentially the same thing as the picture you sent me. So the leftmost, I'll say column is the date, right?
mhm.
So I mean, it's at the start or the end of it. Every month. They didn't say when. Could be start or the end of the month.
Mm.
Uh, or they could just do a lump sum, which is what I think the answer did. So I'm just gonna follow that. 20x 2020. Okay. So 2020 they essentially just drew cash, right? So
Mhm.
how it works is account name on top, right? And debit means you debit the account name on top. So this amount here, this amounts here, right, is referring to this account itself. Okay. Then this is the opposite account, meaning that if you wrote this whatever transaction here in the debit section, the debit column, it means that for cash you did a credit. So to illustrate, right, it looks something like this. So cash, right? Uh, so 31st July 2020 drawings, and this would be 400 times 12, which is 4,800, right? So it looks something like this, which is exactly the same thing as debit drawings, credit cash, 4,800, 4,800. Do you see it?
Okay.
Yeah. So these are all the same thing. It's just that it's written in different forms, right?
Mm-hmm.
So, yeah, it's just for your own understanding, right?
All right.
Okay, I'm going to erase the cash account right now. So 4,800 is correct, right? There's no, you won't dispute with that one. Right. So what
Yep.
is next? Also did my, oh, it's not up. Okay.
Next one is telephone expense.
Yeah. Okay. So telephone expense is let's see, apportioned,
What is a portion?
meaning it's split by that ratio. So 25% for personal use and 75% for business use. Is split.
Okay.
Yeah. Though I'm not sure if this is every month or for the whole year. I think if they didn't state, then I'm pretty sure it's for the whole year. Yeah, correct. Okay. Right.
Sorry.
Yeah. Yes.
Sorry. You cut off a bit.
Right. So essentially they didn't state if it's for the month or for the whole year. So you just assume that's for the year essentially, because yeah, to the relates to the year. I guess this is a hint. It's not very very direct. So yeah, just need to be a little careful in this. Telephone expense. So once you've written the date on top, right, technically you can choose not to write the date again. So telephone expense, right? 700. Okay, I'm just gonna write the calculation steps here. So 400 times 12.
Times 12.
This one is 700 times 25%, right? So 700 times 25% is, let me whip out the calculator. 187.5. Oh, it's 700, sorry. 700, 175.
Yeah, 175. Yeah.
Okay. Then yeah, then that should be that, right? Then the next one is inventory for personal use, right? Selling price is this and markup. So do you still remember what is markup and margin?
Markup and margin.
Mm-hmm.
Sort of.
Okay, so explain your own words.
Sort of.
We're gonna do a bit of revision here.
Okay. Markup is 100% of the cost plus the percentage. The extra percentage will be markup. A margin is a percentage of the entire thing from the entire thing, basically.
Okay, so markup of 25%. Is it 25%? Yeah,
Yes.
25%. So what does that mean?
It means he sells it at 125% of the cost, which is 150 times 25%, 125%. 187.5.
That 150 is cost in the question.
Yeah, cost. Yeah, not sales. Sorry.
So, all right, when you tackle this sort of things, right? What are you trying to find first? What is the question asking you for?
That's a good point. I don't know why I'm looking for this.
Okay. I mean, you know that you have to debit drawings and credit inventory, right?
Yeah.
The value of inventory is it based on selling price or is it based on cost?
Value of inventory is based on cost.
Yes. Did they give you the cost in this question?
Yes.
Where is it?
Wait, if business applies 25% markup, on cost to its goods. And the selling price is 150. It means that the cost will be 75%, right?
Is it?
Uh,
By your own definition, doesn't mean that you are calculating this based on a margin instead of a markup.
yeah, it's a margin, no? But it's a markup. I'm so lost.
Okay,
Fuck.
you go back to you were looking for cost, right? Cost is
Right,
what you're looking for, right?
right,
Your selling price is what they give you, right?
right.
So what's the selling price?
Selling price is 150.
150. Sorry, not percent.
That's
Okay.
150 is 125%.
Yeah. So in order to find the cost, do you times 75% or do you divide it by 125%?
Divided by 105%.
Why?
Uh because you're trying to remove take out the extra markup cost and find the original.
Mm-hmm. Yeah. So you confused yourself just now.
Yeah, I did. Okay, understanding the margin and markup and applying it is different sort of thing. Holy shit. It's a
Mm.
different feeling.
Then you write it down at the very start. What does it mean for markup? What does it mean for margin?
Mm.
You just need to write markup, the cost is 100%.
Mm.
Then for margin, the selling price is 100%. Then in that case, you probably
Mm.
won't get confused anymore.
Okay.
Right. You can try it the next time you meet this sort of question. I'm pretty sure there may be more
Okay.
opportunities out there. Especially when you do inventory. Right?
Mm.
So inventory would be 150 divided by 1.25, which is 125%, right?
Mm.
Okay, so it's 120. Okay, then for T accounts, it's important to actually know what type of account this is. Okay, so there is essentially two types of accounts. One is
Right.
temporary account, meaning that it gets closed every year, right?
Mm-hmm.
And there is closed meaning you tally everything and then you zeroize the account, meaning the account returns to zero. The amount will be shifted to another account. Okay, that's what they mean by temporary account. And the other one is permanent, essentially permanent account, meaning it will carry over year after year until you decided to dispose of whatever that account is, right? Meaning it doesn't exist anymore. You can basically zeroize it, make it zero, and
Okay.
close it essentially. But if nothing
Okay.
happens, you keep running it, like you keep carrying it on over the years, right?
Mm.
So what account is drawings? Is it temporary or is it permanent?
Drawings is temporary.
Temporary? Are you sure?
Is it?
What makes you think that it's temporary?
Hold on, I'm lost. What was the exact difference between temporary and a permanent account?
Temporary account, you close it every year, meaning that it becomes zero at the end of the year,
Right? Becomes
with no exceptions.
then won't you have to close? Won't you have to close drawing since it's
Okay,
because it's the end of financial year?
let's give an example, right? An
Right.
example of a temporary account could be revenue. Why?
Okay.
Because you do all the revenue over the year, right? So over the year,
Right.
you have a sum, right? Total over the year. And then you shift it to income statement,
Right.
right? Your revenue doesn't carry over from the previous year, correct? You don't see the revenue balance increasing over the years because you keep making more revenue, right? It becomes
Mm.
zero at the end of the year. Then at the start of the next year, you start from zero, right? Because it makes sense.
Mm.
You are looking for revenue over the year. You don't just carry it over to the next year, right?
Mm.
So this is what we mean by a temporary account, right? A permanent account could be something like your motor vehicle, right? Because it's at cost, right? You only have accumulated depreciation, which is another account, right? And this cost doesn't change, right? Doesn't change unless you do something to it. So it remains static, right? And it doesn't make sense for you to make it zero at the end of the year, because where are you gonna put it to, right? Does that make sense? So this is why we say this is a permanent account. So now you note the difference between this. This is relating to the income statement, right? This is related to your statement of financial position, right? Essentially, that is
Okay.
that if it's related to your income statement directly, right? Revenue, expense, usually are these two, right? You'll be closed at the end of the year because you're only recording for that year, right? So you don't carry over to next year. But things like motor vehicle, you can't close it unless you sell it, right? Does that make sense, right? Because it belongs to a company, and the cost doesn't really
Okay.
change unless you do something to it, like you give it renovation, you do a makeover, you improve it, right? You add value, decrease value, things like that. But otherwise, you can't make it zero at the end of the year if nothing happens to it. Does that make sense?
Okay. So,
Mm.
from what I've basically, from what I can see is,
Mm.
for temporary accounts, your entries, TLDR is to just be able to shift to a new financial year. While the permanent account, right, is specific to that year. The entries are specific to that year, and unless basically changes are made to the value of the entry, there is no it doesn't move to the next financial year.
You got it the other way around, by the way.
Is it?
Permanent account are called permanent because it stays there.
Huh.
It's a literal definition. The balance stays
Oh,
there.
okay.
Yeah.
Then
So
I'm so lost.
because I
uh,
mean, like for example, you bought your car in 2005, right? You bought it
mm,
for $1,000. I
mm,
don't know how, but if you don't do anything to a car, does it stay at $1,000 in 2006?
yeah,
Yeah. Does it do that to 2007 if you don't do anything to it?
yeah.
Yeah. So correct, right? So but if you earn $100 in revenue in 2005, in 2006, do you carry over like 100 plus? Then for example, for that year, 120,
Oh, okay.
right?
No.
So this is why you say this resets to zero, and then for the next year it will become 120. So it's
Okay.
0 plus 120.
Okay.
Yeah. And this amount, 100, will go into your income statement, right?
Right.
Okay, so now do you understand it?
Yeah.
Okay. Then now that you know, right? What does drawing look like to you?
Uh, drawings they reset to zero, right? Or is it cause their cost?
You go back to the definition of drawings.
Uh drawings money owner takes assets out for personal use.
Mm-hmm.
Takes so the value doesn't change, then it's permanent.
Mm-hmm.
He
Yeah,
permanently
correct.
takes out the
Correct.
okay.
So if it's a permanent account, and this one is important, right? It'll be a balance carried down. So meaning that you shift it for the next year.
Mm,
Yeah. So okay, pardon me. Let me go and remove this. I'll just remove this entire part. It's not as important, right?
mm,
Just give me a second. Okay. Right. Right. So carried down and brought down, right? Okay.
mm-hmm.
So you know that debit must equal to credit, right? This accounting
Yeah.
basics,
101. Yeah.
right? So what is the total here?
The total is 4.8 plus 175 plus 120. That is 295 5095.
Mm-hmm. Okay, so you know that it has to be the same, right? So you write 5095 on the other side, right? Because
Right.
the other side is 0 right now.
Mm.
Okay, then okay, this one still needs a date. So 31st July 2020. Yep. This will be called balance carried um carried down, right? Or carried forward, right? And
Mm.
then well, I mean there's only one entry, so you just write the same value, right? And then that will be the end of the year. This is how you carry it down. And to illustrate what happens in the next year, right?
Mm-hmm.
1st August 2020, right? Balance brought down 5095. And you carry on from there.
Oh,
So this is
so
what happens for permanent accounts.
okay. So
Mm,
for permanent accounts, the ending of the financial year, you say balance carry down, and then for the new year is since it's brought down, you've
mm,
brought down, right?
mm.
Okay.
Okay, so to illustrate what happens to a temporary account, okay? Oh, hello, Shen.
Mm.
So, okay, I'm in the middle of lesson, sorry. I'll thank you for it later, right? So for something that is temporary, it will go to income statement
Mm.
and then this 5095 instead. So then it won't have the balance brought down because there's no carrying
All
down. You
right.
just 5095 immediately and nothing happens. This account is 0 already,
Right.
right? Then the next year you just open a new segment. So and then this won't be 1st August anymore. This will be whatever date the transaction occurred.
Right.
Yeah. Okay, I'm going to erase the red part because it's a bit uh confusing, right? But that's just to
Mm.
show you what happens if you have a temporary account instead. So things like revenue, things like expenses, right?
Mm-hmm.
Okay. Then okay, that's question B, right? Part C, uh, counting theory applied with regards to these transactions. Let me create a new section for this. Right. So what does the answer say for this?
Let me see. The answer says accounting entity theory.
Okay. Entity theory. Okay. Right. So essentially, it just means business and owner are separate entities, and
Mm.
you treat them as such when it comes to accounting,
Mm.
right? So that's that. And based on this, right, anything related to company, you record as company. Anything related to owner, but it's recorded as company, you take it out from the company's portion and say that it belongs to the owner. That's it.
Okay.
Yeah. Right. The second one, is it just an explain? Okay. Yeah.
Yeah.
So, all right. So,
Okay. By definition,
mm-hmm.
sorry, by book definition,
Mm,
the owner and the business are considered separate entity. So you have to put that point.
yep.
Hence, the owner's personal transactions, including drawings, should be recorded separately.
Yeah. Okay. So
Yeah,
that's it. Yeah.
it's basically expanding on what you said
Mm,
with a second point, but it's kind of redundant.
mm. Okay. Right. Then part D, explain what drawings do to the profit for the year.
Uh, Drawings, it credits profit of the year. believe.
Credits why?
Because he takes out assets.
He takes out assets.
Is it not?
Is assets related to the profit for the year?
Uh,
Okay, how do you calculate profit for the year again?
profit for the year.
What do you start off
Okay.
with?
Uh, oh my gosh, I forgot this. Can't believe I forgot this. Oh, where's my notebook? Ah, crap. I left my notebook again.
Yeah, sure. Take your time, no
Ah,
worries.
uh, uh, sales revenue.
Okay.
Uh, deducts other expenses.
Mm-hmm.
Uh, and was it gross profit?
No, gross profit
Was it?
is sales revenue minus something else.
Oh, gross profit is sales revenue minus other expenses.
Are you sure?
Is it not?
How do you generate your revenue again?
Mm, sales revenue.
Uh-huh.
Uh, frick.
I mean,
I'm
if
sorry.
if any normal manufacturing business or retail business, what do you sell?
Sell inventory.
You sell inventory, right?
Yeah.
And well, I mean, you have bought the inventory from somewhere, right? Right?
Oh, so sales revenue minus cost of sales.
Yeah, exactly. That's it. So revenue minus cost of goods sold, so cost of sales, right? It would be gross profit. I'll call it GP. Other
Mm,
expenses, you less it from uh gross profit to get profit for the year.
mm,
Yeah. So in any point of this, right, is cash directly involved in any of this? Because these are
no,
these are all one like each of an account, right? Is there a cash account in this?
no, there isn't.
Yeah. So if there is an impact on cash, does it affect profit for the year?
No, it doesn't.
Okay. Then all right, the first one no effect, right? No effect.
Right.
What about the second one?
Second one. Uh,
Mm-hmm.
Huey 5%.
Sorry, you cut out a bit there. What did you hello? Oh no. Uh hello? Oh no, okay. Alright. I think he has some technical difficulties, so we'll let him settle that first. Alright. Let me just think. Okay, hello Shinzo. Yes, good evening. Thank you for the cheers, right? No, you really don't need to do that, by the way. It's appreciated, but you don't have to do this. How was your day? I think yeah, I think it's been a rough few days. Um yeah, okay, so I guess it's good to be back actually. Right. Let me see. Ah. Okay. Just stay and enjoy the stream, alright? Okay. Meanwhile, let me see. I think he still has having some difficulties. Uh let's see. Online. Oh no. Oh no. Okay. Right. So this would be okay. I think while we wait for him to fix that, um, maybe a bit of introduction to my channel, I guess. right? If you made it this far, thank you, right, for clicking on the video, for staying this long, right? Um, I basically only really do well, not only, but main objective for the channel is just do educational videos, right? Educational streams, where I go through, more simple accounting concepts, accounting principles, right? I find it easier to work through questions because questions are designed to, test you on certain knowledge, right? Usually it's the basics, fundamentals, right? So that's why I choose to go through questions. I find that it gives more structure to the entire video itself. So I think I'll stick to that a bit more and only use those sort of supplementary videos to really just clarify certain concepts, right? That I think are a bit more confusing or challenging. So those videos really wouldn't put much journal entries inside. Instead, I'll just explain why we do certain treatments, like why does it exist, right? And how to compute it, run you through the understanding, all that stuff, right?
Hello,
Okay, he's back.
hello.
Hello, is it alright on your end?
I'm sorry. My PC likes to do this sometimes.
Okay, yeah, no worries. Um,
Uh,
right, so as
where
I
were we
was,
at?
yeah, go
Where were
on.
we at?
Oh, okay, we're at point two. So
Right.
does point two have any effect on profit for the year?
I believe we came to a conclusion of no effect.
That's point one.
Point two.
Yeah, point two.
I still stand at no effect because the 25% for personal use is accounted in the 700 that is for $700, which is 100% of business fund expense.
Okay. Telephone expense, is it under any of these three?
It is under other expenses.
Okay, it's under other expenses, right? Telephone expense.
Right.
Okay. Then let's draw the T account for telephone expense, alright?
Mm.
I'm just gonna simplify it. I'm not gonna write the date. Okay.
Mm.
So debit. Oh, sorry. Debit, credit. Okay. So, at whatever date they incurred a, I'll just assume they pay in cash, okay? Because the question didn't say, and honestly, they don't need to say, right? And this amount is 700, right? So they incur in full 700, okay? And then, drawings, you credit 175, right? Let me check. I think it's correct. Yeah, 175. So in the end, you and then you put the income statement, right? 700 minus 175. 525. Okay.
Mm.
So in this case, right? Uh what was the net effect here?
Sorry, what was the net effect?
Is there any effect on profit for the year?
No, the drawings are still it was still 700, no?
Is it really? The drawings
So,
took out 175, right?
Sorry, my brain's not functioning.
So this would be,
This is understated.
yeah.
Yeah, it'll be the profit of the year will be understated.
Understated.
Is it not? He drew
Telephone
expenses
expense
are
would be
expenses are overstated.
expenses are overstated.
Is it?
Yeah, that's true, correct.
Yeah,
Okay,
expenses are
then profit for
overstated.
the year is
So
understated.
yeah, profit. Yeah.
Not sure if you want to say over or understated here. I mean, it could work. Yeah, okay. If you're going with the under and overstated, then yeah, sure. This would work.
Mm.
Okay. Yeah. So, right, it should be 525, right? But recorded as 700, right? So sure, okay. If you want to go by that line of reasoning, yes, it's correct. Then right, so it has
The
the
third
effect, right?
part. Yeah.
Okay. And what about the last one?
Took inventory for its own use.
Mm-hmm.
Uh, so at inventory is valued at the cost. What was the cost that we determined before? It was 125, right?
120.
120. Uh, so he took 120 dollar worth of inventory. Uh,
Mm-hmm.
$120 of inventory. Uh, so profit of the year would be uh understated.
Does inventory appear in this formula?
Cost of inventory, no?
Did you already sell those inventory? If you already sold
Uh,
it, how would the
oh,
owner be able to
right,
take it?
right. No, there's no effect.
Yeah, okay. So first things first, right? You don't look at the numbers. You look at the
Mm,
accounts. Because I think you focus a bit too much on the numbers, right?
mm,
When in fact you have to determine the nature of the account first, right? So
mm.
accounts come first, number comes second, right? Try not to mix the two, you'll confuse yourself, right? So
Okay.
focus on number one. You look at the question, they're asking about profit for the year. So what goes in profit for the year, right? Revenue less
Mm,
cost of sales less other expenses. Then you look at the account. Is this account under any of these three, categories, right? Is it a
mm,
revenue account? Is it an expense account? Is it under other expenses, right? If all three
mm,
are no, right, you don't even need to look at the figure. Just say it has no effect,
mm,
right? Okay. And to illustrate this, right? Okay, now we know profit for the year. It's understated by profit of for the year. Profit for the year understated by 175, right? Hello? Oh no. Hello, can you hear me? Oh no. Uh he's gone again. um that's unfortunate. Yeah, okay. Uh right, okay. So where was I when I was speaking about my channel? All right, yeah. So I tend to try and incorporate more reasoning into my videos, right? The reason is very simple for me, right? If you understand the reasoning, then you can work your way through the entire thought process and come to the answer itself. Sure, it's not the fastest way to do things, right? But it's the most consistent because for me at least, my memory is quite terrible, right? I really cannot memorize formulas. So most of the time, I work my way from the very first accounting equation all the way down, right? And to be able to do that, you need to be able to understand what each account mean, right? Why do you do certain things, right? Why does it exist? Why do we debit this, credit this? What does it even mean to debit or credit something, right? Um, and there is a few ways to build the understanding. One is to just keep practicing, which was what I did back then. Eventually you could learn to appreciate it, right? After you go out in the real world and see exactly what it means, right? To have, you basically see what happens before you actually record it, right? Because recording means that something has to have happened before, right? So, and yeah, that's the reason why I would say accounting is not that dry. It's only dry in the classroom, right? But if you go out to work, you can see it in action. It's not terrible. Right. Okay, so that's the first point. The second point is that again, because I choose to explain on the side of understanding, right? Everyone's understanding could be different, right? The way you understand stuff, the way you look at the world could be different, right? So sometimes my explanation might not gel with you very well. You might struggle to understand. And that is perfectly fine. Okay. Perfectly alright to have that. So I think the best course of action if you don't understand something is to ask, right? Ask your teacher. If you don't have a teacher, ask your someone who is more knowledgeable than you in accounting, right? You could ask me, but if it's more advanced stuff, I might not be able to answer you, right? Um, could technically
I
ask authorities,
apologize.
but yeah, okay, that's that. My
Hello.
students back. Hello, right? So
Thanks.
sorry about that. Um, okay, where did we leave left off? Where we left off?
Uh, we uh, I don't remember.
Okay.
Uh,
We've established that profit for the year has been understated by 175, right?
yeah.
Okay. Um,
We left off at the no effect for the third point.
for the third one, okay, then
Mm,
I stated that, I mean, after looking through all three, right, and the final net impact is profit for the year is understated by 175, correct?
right.
Okay, so let's look at the entire thing from the accounting equation perspective, okay? A
Mm,
equals to liability plus
plus
equity,
equity.
right?
Right.
Okay, so under asset you have cash, right, and
Mm-hmm.
inventory.
Mm-hmm.
Okay, under liabilities, which we won't be touching because there's nothing. Under
Mm-hmm.
equity, there will be drawings,
Drawings.
right, and there will be um profit for the year.
Mm,
Mm. Drawings is a contra equity account, meaning that it subtracts actively from the equity itself, right?
mm,
So we put it as negative. Okay, so cash, right? What was the impact here? 4,800, right? You
mm.
took out. Okay. And here you also took out 4,800, right?
Right.
Inventory, we took out how much? 120, right?
Mm,
And in the drawings you also took out 120,
mm.
correct?
Right.
Yeah. And for um equity, we decrease expense, right?
Mm,
Let me see, where is it? Oh yeah, here. Right, 175. So the net impact here is overall, right? Overall, the net impact is 0, right? But because they ask you what the impact for profit for the year is, you just look at this column. Do you see it now?
so it'll be understated, right?
Yes, but this is the illustration of the big picture.
Mm.
Yeah. Okay,
Is
maybe it's
that
a
a
bit
final
too
answer?
early to appreciate this right now, but uh when you do accounting, right, it's never about the individual transaction. Sure, that is important, but it's not the end all be all. You look at the
Mm.
whole big picture, still net zero, but there's shifts, right? There are shifts in the uh you know
Right.
accounts itself, right?
Right.
So
Okay.
it's
So
better if you look at
the
it like this as well after you've done a question, right? To really appreciate what is going on here, right?
okay.
But
Uh,
yes.
so the 175
Mm-hmm.
it balances out with itself under drawings, right? So technically, there was no changes to the entire since it balances out itself. There was no effect. Am I correct?
It balances out in the accounting equation because A equals to L plus E. You can't
Right.
have assets, equity, or liability appearing out of nowhere.
Right.
Yes. But it
So
doesn't balance itself out in profit for the year itself.
Uh,
Yeah.
so the question still stands, right?
Mm-hmm.
So did it affect the owner's drawings did the own effect of the owner's drawings affect profit of the year?
Yeah, of course it did. We already established that, no?
Right. Okay.
Yeah.
Here's where why I'm so confused, right?
Mm-hmm.
Under the answer sheet, it says no effect for this part.
No effect, eh?
Mm.
Let's see. Does it affect profit for the year? Are you looking at part E?
No, it's part D.
Part D?
Yeah.
On the business profit for the year, eh?
You can look into the screenshot, the photo I sent you before. Uh, I covered it up with my thumb. Oops, I'm sending you a new one. Here.
Unless what they mean is that decrease owner's equity. Okay, E is definitely true.
Excuse me.
Yeah, question E is definitely true because I mean I drew out the entire equation, right? It did.
Right.
D is, well, I would say it's interesting. No effect. Eh? Unless in here the telephone expense was not recorded since the beginning, right?
Right.
So what might have
Unless you're
happened
somehow
for them to come up
misunderstood.
with that answer would be, okay, where did my, okay. If, okay, D would be this answer if in the telephone expense itself, right?
Right.
It didn't go into this T account. It did not get recorded as $700 out.
Okay.
So, what likely might have happened here would just be, okay, this will be what it looks like if we're looking at general journal.
Okay.
Okay. Your telephone expense, your drawings, and then your cash. Okay. Okay. Wait, hold on. Cash shouldn't be this. Cash have an indent because we're crediting it, right? So debit, debit, credit. Telephone expense would be 175 minus, what is the amount? 525. Right. And this one is 175 and 700. So this would be the answer if at the very start it's written like this.
Okay.
Okay. And it might be the case because there was no correction, I would say. And yeah, I think this was what the answer was going for, like, essentially. Yeah. So this case would be more of an error correction. Because you wouldn't have recognized it since the start, right? So in that case, then okay, then I'll say D will be this answer. Yeah, this one will mean there's no effect on profit for the year. Yeah. Okay. So I think the answer is correct. I guess I made a mistake there. My bad.
Okay. I mean, it's not so much mistake as it is misunderstanding.
And that's a mistake, no?
I mean, in your when you solved it, your under your thought process, there was kind of no mistake. It's just me. It's just I think they just. Yeah, I guess no, it is a mistake. Sorry, I tried to defend it.
Yeah, I mean, if there was no mistake, there wouldn't be an error correction.
Right.
Yeah. So okay. Yeah, so I mean, correction usually isn't preferred in accounting anyways, because the more journal entries you make, the higher chance you have of making a mistake in the actual journal entry. So I guess yeah, the best way is just to have this one step. Yeah.
Mm.
Okay. Then I mean, part E we've already went through, right? If we just again, I think I'll just draw the accounting equation because it's easier.
Right.
Okay, I'm gonna swap the
The E and L so
yep.
that you can just remove the L. It's
I
easy
really
to
can't remove the L, but
yeah. It's to set it aside lah, so to say.
mm-hmm. Okay, drawings would be a negative account, right? Then profit for the year we've already said it doesn't affect.
Right.
So yeah. So 4,800 subtracted, right? This would
Mm-hmm.
be 4,800, right? Inventory 120, 120. And then for this one could be okay, assuming they paid by cash, right? Assuming they paid by cash, it'll be 175, 175. That's it.
Okay.
Yeah.
Okay.
So net effect, I mean decrease equity in general.
Right.
It's 5095 decrease. Yeah. And then total asset decrease 5095.
Mm.
Yeah, and that's that.
Okay.
Okay, yeah. So far any questions that you want to revisit?
I don't think it's so much as a question as it is being familiar with the T journals. I think I'll just have to revisit this video a few times to look through the things.
T accounts. Honestly, the best way to do to learn T accounts is to draw it out.
Mm.
Yeah, really
But
just yep.
then again, when to use T accounts is another thing because they don't ask specifically for a T account sometimes. Sometimes, like just now, we don't know if we're supposed to use
Mm.
the profit of the year account for profit of the year or whether for the general journal. So
T accounts is more for bookkeeping. So it's the very, very lowest basic of accounting, essentially. Right.
so it's
So
just to
if the
boil down
question
to that.
didn't ask specifically for T accounts, I uh wouldn't recommend you drawing it because it takes too much time. But
Okay.
also in this case they say account, so I don't know what they're referring to here.
Okay.
I'll say if the answer said that you like that format that you know that they gave you,
All right.
I guess you could just use that.
Okay.
But I'll say T accounts is the underlying mechanics of it.
Okay.
Yeah. And as for when to use, it's really up to your own judgment, to be honest.
All right.
Usually the question will state specifically for you to draw T accounts.
Mm.
Then you must draw. So yeah. And for this case, I drew it because I realized I didn't teach you at all about T accounts, if I remember correctly. I don't recall teaching T accounts yet. So I think
Okay.
this was an opportunity to incorporate it.
Oh,
Yeah. Okay, other than that, anything else?
okay. Nothing comes to mind.
Okay, then we do a quick recap. Right. Essentially we went through definition of drawings, right?
Right.
Went through a bit of T account, what is a temporary and permanent account. We revisited
Recap the
what is
markup.
markup and margin. This one you be
Yeah.
careful, okay?
Right.
Right. If you have to take anything away, right, it's just markup is you take cost as the 100%, right?
Mm-hmm.
And then everything else would be deduction, logical deduction, right?
Right.
For margin, selling price is 100%, then
Mhm.
cost would just be 100 minus whatever the percentage is, right?
Mm-hmm.
For T accounts, not much to say. I would say it's similar to journals, right? It's just that you look at one side only, right? And we learn a bit about temporary and permanent. As the name suggests, one, you carry it down to the next year if nothing happens. The other, you close it and move that balance somewhere else, right, at the end of the year. Okay, then we went through one accounting theory, the entity, separate entity. It's more like common sense, right? But it's something that accounting runs on very firmly because especially for sole proprietorship and for partnerships, right? Because the as how do I say? According to Singapore law, at least, right, there is no legal distinction between the two, meaning that as a sole proprietor, your business lives and dies with you unless you pass it on, right?
Okay.
And even if you pass it on, I think there's still some procedure. I do not know which one, right? But most of the time it just lives and dies with you. So if you're a sole proprietor, right? If you happen to pass, right, touch wood, your company is gone. Right? It doesn't exist anymore.
Okay.
And if your company owes people money and your company doesn't have enough money to cover it, you pay from your own pocket.
Right.
Yeah.
Okay.
Because the law, in the eyes of the law, right, the company and you are the same thing, right? But in accounting, it's still important to differentiate between the two.
Yeah.
Yeah. Because what's stopping some owner from, just using everything from the company,
Right.
Yeah. So, I mean, it makes logical sense, right?
It does. It
Yeah.
does.
So, this is just built on logic, right? Part D is just,
Yeah. Part
it's
D.
consolidating
Yeah.
everything that we've learned so far, right?
Yeah.
Profit for
It's
the
very
year, what's inside, you look at the account nature, make sure that the account is dealing with it, right? And in this case, this is a mistake that I made, right? You don't recognize it already, right? Like drawings will just go straight to drawings. You don't recognize it under telephone expense first, then you bring out the drawings. That's not correct. Okay.
Okay.
Yeah. So the right way is just do one step. Just debit telephone expense and drawings, total 700. Right.
Right.
And in this way you make the distinction immediately.
Right.
Okay.
Okay.
Yeah. So net effect on profit for the year is 0. Right. And net effect on owner's equity or just equity itself, it's decreased because the owner did drawings, right? They took money from the
Right.
company. So that makes sense. Right?
Okay.
Yeah. And I would suggest you just draw the accounting equation, right? If you know how to categorize the accounts properly, you just plop it under the correct element of the equation and you can see the net impact already. This one, do you get?
Sorry, what?
Like under asset, you have cash inventory. Under equity, you have this. So you plop it underneath, then you look at the net effect.
Oh, okay.
Yeah, that's it. Yeah.
Okay. It took a moment to register. Sorry.
Okay. Then other than that, you have anything else that you want to clarify before we go?
No, I do not. Thank you so much.
Okay, no worries. Thank you so much as well. Right, I'll see you next week. It'll be on Monday and Friday, okay?
Okay.
Yeah. Alright, then other than that, yeah, take care of yourself, yeah? Yep, bye-bye. Okay, so yeah, that's the end of the stream. Thank you so much for watching to the end. Yeah, I made a few mistakes today. But I think yeah, if we learn from those mistakes, it'll be great. I'll learn from this too. Again, if you have any questions, right, because we all understand things differently, right? If you have any questions regarding some of my explanation, feel free to drop me a message or comment, right? The fastest way you can get an answer is through streams, right? If you just drop by my stream and type a message, I can respond immediately, right? The only exception I can make is if I am already conducting a lesson, then you probably have to wait till the end of it, right? Usually my lessons are about 30 minutes to 1 hour long, right? Um, and you'll get your answer at the end of the stream. If I couldn't do it, then I'll actually make a separate video for this and upload it to YouTube, right? Other than that, that is all from me today. All right. I hope you guys learned something, right? From it. And that is all from me. Thank you so much again. I'll see you next Monday. Bye bye.